Welcome back to the program. I'm Zev Brenner. You're listening to Leumi Financial Corner. With us once again, Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of Investment Committee for Leumi Investment Services. Michael, good to speak with you again. How are you?
Everything's good here, Zev. Good to speak with you again.
Good to have you back on the program. So, last week was a crazy week. We read about people and investment bankers and people distorting stocks and selling short and referring to GameStop. What's going on?
Zev, it's a great question. And again, just want to remind everybody the views expressed are my views, not necessarily those of the bank or the broker dealer. But I think last week is a really good example of what I would call the unintended consequences of government intervention in free markets or capital markets. And now that everybody's looking to do the debrief on what happened, what went wrong, was anything illegal done, I think it's really important to just step back. And again, my view as a free market capitalist is that the collective wisdom of the markets, generally speaking, always prevails. The collective wisdom of the market, typically does the right thing. And ultimately, I think a lot of what you saw last week was the way that the market has responded to, I would say, acts of government intervention in those markets. Without going into the details of the story, which I think have been well publicized, if you think back to several years ago, a lot of our arbitrage on opportunities like this used to be done at capital markets desks of the large investment banks. Because of capital restraints, a lot of the investment banks are no longer able to engage. So what you're doing is you're changing the nature of the market in terms of who the market participants are and where opportunities are being found and discovered. I would also say that if we want to look and point fingers at where things went wrong, starting back at the point that the government allowed a security like GameStop to be shorted by the magnitude of 140 times the long value of it, probably a good spot to start looking. So I find it interesting when the government says we need to regulate more in terms of understanding what happened. I think that probably the real answer is we need to deregulate more. We need to let capital markets work and function and let all these stocks and securities find their right level. And that actually, Zev, brings me to a different part of the equation, which is also the deeper involvement of the government in capital markets right now. And I think while many of us can have our views and opinions on where market levels should be, as I've stated many times before in our discussions, I think right now there's a tremendous amount of government intervention that, again, is distorting markets. And if you look at how the central banks have pumped trillions of dollars of capital into the markets, if you look at a lot of the fiscal stimulus that's coming into the markets, a lot of people that have typically looked at, let's say, true fundamentals to try to gauge market values and values of individual securities, et cetera, are really struggling with where the market is right now because of all that government intervention. And at this point, I think what we need to do is kind of separate, fact from reality, models from forecasts, and just accept the fact that this intervention is in the marketplace. This intervention is likely to continue in the marketplace. So we just have to accept it, deal with it, and look at the events as they are, not as how we wish they would be.
Well, with a new administration, are we going to see more government intervention?
It's a great question, and I think the reality of it is we have seen more and more intervention, creeping intervention, if you will, over the years. Regulators want to regulate, and as long as we have regulators in the market, they're going to look for different ways to kind of regulate. And ultimately, I think when you look at the capitalist system that we have, you look at the financial markets, in a lot of ways, the example I like to use, it's kind of like water, money in capitalism is like water running down a mountain. And no matter where you put gates up or how you put gates up, it's still going to find its way down. So every time there's a regulation that the government imposes, my argument would be is it does something to distort the market. And eventually the market will take that information in, we'll think it through, and then we'll find ways to reassess, risk-taking rewards and find out ways to circumvent or move around those barriers that have been imposed. And again, it's like water finding its way down the mountain. So if there's going to be a push in one way or another to eliminate shorting or reduce shorting or do something to shorting, you'll have another reaction. If there's a call to prevent people from getting together and blocking orders together through social media, they'll find another venue. And, again, I think that the collective wisdom of the market is the best way to sort out price discovery. And, I think we just need to accept that for what it is and continue to look for where we see the opportunities. And again, I go back to the fact that the number one opportunity in the market right now is the vast amount of liquidity being pumped in. And ultimately, again, if you use the example that I said earlier about money in capitalism is like water flowing down the mountain, that money has to flow someplace, and we continue to look for the pockets of where it's going to flow. And again, in a market so distorted by central bank intervention, really struggling with how much valuation matters right now in the short term, and where the economy grows from here as to whether or not it can grow into the valuations, which in some ways we're starting to see with improved earnings, improved economic outlook, improved picture in terms of, COVID vaccinations, et cetera. And, again, we just need to live in the world of reality of what the world looks like, not how we want to model it to be.
Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of Investment Committee for Leumi Investment Services. Thank you for being here with us.
Thank you very much, Zev. Speak to you soon.
And we're going to be right back. Don't go away.